Yo, what's up, boys? Hope y'all are doing fantastic. Today I want to show you guys exactly how this works, and at the same time we're going to do a video so other people in Cerberus can learn how to trade Binance Futures, because really this is the best solution for the actual market and for every single other market out there forever and ever. If you guys love crypto, if you guys love finance and investing, this is the shit. All right, so let's start with Binance Futures first. The first step is you guys creating your account. I'm not going to go through that. It's pretty basic. You just go on Binance Futures and you create your account. We have a link that you can follow. Now, when you have your Binance Futures account and you're ready to go, now the question is, what the fuck is next? Well, let me show you what's next. First, you need to understand how this works and what it's all about, right? So you have this pair, for example, which is BTC USDT. Normally, you can do something that is called spot, and that is the normal BTC Binance, right? You can go on Binance and you can swap either your USDT into BTC, or you can swap your BTC into USDT. There's no way for you to get liquidated if you're spot trading, right? Because you're only playing one-on-one, 1x. So the value of your dollar is worth $1 in the market because there's no leverage. So basically, what happens is when you swap your trade, right? Whenever we were swapping shitcoins, we would go from BNB to the same value of shitcoins, and we would be constantly doing those swaps. The only thing that would happen is that you would lose value in one of these two assets, right? The only thing that could happen is you lose value in one of these two assets. For example, right, problem with the crash that happened is we had so many BNBs, we had so many trades going on, but it didn't matter where you put your money because both of those assets were valueless, right? BNB went down to $200 and the shitcoins went down to fucking zero. Wherever you put your money, wherever you put your investment, it didn't matter because everything was down. Where were you going to hedge your money? So that is swapping. And then when you swap, let's say both are high valued. Both the shitcoin is blowing up. It's at $1 billion and BNB is at, I don't know, $1,000 of BNB. You're going to make a difference between the two. When you convert your shitcoin into BNB, what you're going to make as a difference is the value the BNB takes when you swap your shitcoin. And whenever your BNB, you now have more BNB, now you can buy more shitcoin, right? So it's that simple. That's spot trading. So you're making money out of the value of one of these two tokens taking value, or one of the coins. So I'll give it another example. You have Dogecoin and you have Bitcoin, right? You can say, okay, I have 1 million Dogecoin, and that is worth, let's say, $100,000 in the market. And you send that $100,000 in value of Doge, this guy, right? Swole Doge. You send that value and you swap it into Bitcoin. So now you have $100,000 of Bitcoin, and now your Bitcoin goes up in value. Boom, it goes up in value. That difference of value going up, that's your profit. And then if you want to hedge it with Dogecoin, you send it back to Dogecoin, right? So you swap your BTC into Doge. But if your Bitcoin goes to $0, you still have that same amount of Bitcoins. So that's what trading spot is. Now, futures is really different because the system can literally liquidate your account from those Bitcoins. So let's say you have 2 Bitcoins, right? And 2 Bitcoins lose their value. Well, instead of just losing their value, if you're trading futures, you're going to lose the Bitcoins because you're betting that your Bitcoin against, let's say, US dollar is going to be stronger, or you're betting that your USD is going to be stronger than your Bitcoin. That's the simplest way I can put it. Let's say there's a there's a broker and the guy, says, okay, what do you bet? Do you bet it's going up or it's going down? You give your money to that guy. Okay, you give him your money, and if it goes up, he gives you, if you win the bet, he gives you your money plus your profit. But if you lose, and you lose too much, he's just going to take your entire money, right? Not just the value of your money, but your entire thing. But then that is, I'm mixing a bunch of stuff just to make sure everyone understands what I'm talking about. Now, the reason we're doing that is because you can go and tell that broker, listen, I have $1, but I want you to bet $1,000 in the market with this same dollar that Bitcoin is going up. So that's called leverage. And every dollar in the market is worth whatever the amount you put. You can put 20x, you can put 30x, you can put 50, you can even go all the way up to 125x your dollar, the worth of your trade. And everything that I'm saying right now is going to be super clear once I show you this graph and how it behaves and what it does, right? So this is BTC USDT. It's the same chart for anything. Like USD dollar is the same as USDT. USDT is just the tethered USDT. It's the crypto version of USD. The only reason I'm trading futures on Binance is because I don't need to open an account with a broker, go into the bank, and super complicated. This is super, super duper easy. Now, what's cool with trading Binance futures or just futures overall is that you can make money on both sides. You can make money when it goes up and you can make money when it goes down. It's really that cool. Now, if let's say you buy here, right? I'll give an example. The example of this morning. We entered at this morning, we entered right here at 34,400. That was our entry point, okay? 34,400 was our entry point. We entered the trade, and we bet, okay, this is going up. And it's going up all the way up to 34,500. Now, it went down a little bit. It went down, I think, 30%. 30% something. I don't remember. And it went all the way back up as expected. And then it's going to keep going back up all the way until it touches 34,500. Now, let me show you exactly how this works, how you enter a trade and how much money you can make. Now, let's say our entry point is, let's say we all agree, hey guys, here's the reason we're entering this trade. The reason we're entering this trade is because blah, 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 boom, 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 boom. These are the exact reasons we're entering this trade at $34,000. I have $1,000 in my wallet, and I say, I'm going to put 50% of my wallet into this trade. And the trade is long, right? We're betting that it's going to go and touch $34,500. That's what we're saying. So we need to open a long position. So long is up, short is down, okay? So we're saying, okay, we're opening a long position, and we're saying it's going to go and touch $34,500. That's what we're saying. And I'm going to put 50% of my entire wallet into this trade. Or I'm going to put 1% of my wallet, or 2% of my wallet, or 5% of my wallet, right? If I have a lot of money in my wallet, even if I have $1,000, let's say I have $1,000, I wouldn't go anything above 5-10%, right? Because it's all about management, account management, and how you manage your trades. So let's say to put it as a round number, you say 50%, okay? So we put 50% of the entire wallet. If I have $1,000, that's $500 in the trade. This $500, you can lose it. If it liquidates your account, if it goes against your position too much, you can literally lose the entire $500 and you can never see it back again, okay? This is what's really fun about this. But if you're smart, if you have incredible risk management and you have iron rules of when you enter a trade and when you exit a trade, right? What's the maximum of risk that you can take in a trade? If you have a really large list of rules, then you can never, ever, ever lose. Exactly like we are doing right now. We can never, ever, ever freaking lose. It's impossible. So I'll give an example, okay? So you put 50% of your account. Let's say, okay, right here, 50% is going to be here. It shows me the number here. It's going to be $64.86. That's going to be exactly how much I'm going to be trading in the market. Now, here at the top, this is where it becomes interesting. You can do two things, either cross or isolated. Isolated, you can go and read about it, but each transaction is going to be a different isolated trade that you can control. So you can isolate your trades into multiple trades, or you can merge so you can cross all of your trades into one. We always go with isolated, all right? Because we want to have control on each individual trade. Now, here at the top is the leverage. And this is what I was saying. You can go all the way up to 125x. 125x is 125x $64 in the market. So instead of just my $64 just being worth $64, it's worth 125 times bigger. So movements are going to be more impressive. I'm going to make money really quickly, but I can lose money extremely quickly also. And getting liquidated is really easy, right? Like if you're 125, I think like 3-4% liquidates your account. So you got to be sure that you're super duper ultra sure that it's the right thing that you want to do. But anyway, we always trade with 20%. This is the max, between 20 and 25. You don't want to go above that, because above that, it's just, you're just playing, right? You're at a casino. You don't want to do that. You want to be a professional trader. You want to be trading exactly like JP Morgan. You want to be an institutional trader. You don't want to be a noob trader, a retail trader that we call. No, you eat their lunch. It's a no-sums game. When someone loses, someone wins. And when someone wins, someone loses. It's really that simple. So the leverage here, you can select your leverage. And this means, okay, I'm going to put 20 times leverage of the amount I put in the market. So if you put $1,000 in the market, you have, I don't know, you have a $10,000 account and you put 10% of your account, that's $1,000. This means that right now, I'm 21% up, right? You see this? My position, I'm at 20% profit, 21% profit. I was at 37 a few minutes ago, 37% profit. This means that if you have $1,000 in the market, if you're 20% up or 21% up, that's $200. It's really that simple. And you can take profit here, right? We do two things depending on the setup of the trade. We either take full profit at 30%, or we take partial profit at 30%. And once we take partial profit, we put our stop loss. This means that it's impossible to lose, because I took my profits, right? I took my partial profits, and then I add a stop loss at my entry point. So my entry point is $34,000. So I enter the trade, I take my partial profit, then I add a stop loss at my entry point of $34,000. This means it's impossible to lose. It's an impossible to lose trade. It's the most perfect trade. A surgeon. This is surgical trades. You're a sniper. This is the kind of trade that you're a sniper. Exactly like this trade that we're in right now. We said, you know what? Fundamentals are telling us that it's going up. So all we need now is an entrance. Let's look for an entrance. We found an entrance. It seemed right, but then it went against us a little bit for hours. And then right now, look, we all took partial profit. We're all making money. It's beautiful. So you take partial profit. This is an obligation. You take partial profit at 30%, or you take full profit at 30%. It's one of those two. And depending on your hunger, you can say, you know what? Okay, the Cerberus has the goal to get to $34,500, but I'm going to take full profit at 30%. If you do 30% every day, imagine that. You do it 5 times a week or 7 times a week if you don't care about weekends. That is an insane compounding effect. You have $1,000 today, $1,300 tomorrow, and then I forgot, I lost count already, right? But it goes up really, 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 really fast. And within a few months, you're a millionaire. Only because you're compounding your account to 30% every day. So it's a lot of dough, I would say. But all you need is to understand the fundamental part. And now this is the most important part. So now you know how to take a position, right? You know that you go here, you always put it isolated, and then you always put a maximum of 25 or 20%. Always go 20%. Long means that it's going to go up, and short means it's going to go down. So you sell or you buy. Now, there's two things here. There's limit and there's market. Market means, let's say I click, let's say 50% here, 50% of my account, and then I click on long, it's going to instantly open the position because it's buying on the price of the market right now at this exact second. This is cool, but this is used only when you see an opportunity that is right now. You don't have time to set it up. You got to get in right away. That's the market, right? You buy in market. But if you buy a limit order, if you do a limit order, you can say, you know what? I want to buy only when it gets to $33,000. Once it gets to $33,000, open a long position. So you see here, price, I put 50% or I put 10% or whatever the percentage is. Don't go above 50%, please. Now, let's say, okay, I'm going to put 25%. I'm going to open it long only when it gets to $33,000. So this means it needs to go down by a lot. It needs to go down by $1,000 Bitcoin. And that's cool. It's possible it's going to happen. And then, boom, when it hits 33,000, instantly opens the transaction and you start buying, right? If it keeps falling, then, I mean, you might get liquidated, or it's not going to fall enough. Then it's going to go back up again, and everything's going to be beautiful. Look, I'm at 32%, 30% profit right now. I already took my partial, so we're good. Now, this is a limit order. So now, you see here, limit, right? You see this limit, 34,500. Basically, what I did is I went in limit order. I entered the trade here at 34,000, and I opened another position, a short position of the exact same value of 50%, right? Because I entered with 50%, and I said, okay, I'm gonna open a short only when it gets to $34,500. So because both are the exact same value, it's just going to close the position. It's going to liquidate the position. And this is exactly like a take profit, and boom, you're good to go. You took your profits. You can open your position now, go to sleep for a week, and it won't matter if you're sure that of the fundamentals. Now, what is a fundamental? Let me explain you what is a fundamental. A fundamental is knowing, right? You know that it's going up or it's going down. You fundamentally know where the trade is going before you even open the chart. Like, you haven't even opened the chart, and you already know exactly if it's going up or if it's going down. Now, if you know exactly where it's going, all you need now is to know where to enter. And that's going to be the difference between a noob and a pro. Actually, noobs don't even get there. They don't even care about fundamentals. But we do, because we're professionals. So once you know, hey, you know what? Like this one. You see this drop? The drop here of these black candles? This drop, and I can show it to you in the original fashion. This drop was China saying that they are banning every single company that is related to cryptocurrency in China. So that dropped the market. If I would have seen that news, because it was during the night, if I would have seen that news, I would have known that the trend was down for Bitcoin. I would have known, you know what? I know for a fact that Bitcoin is going down. Now, all I need is to find an entrance. And the better the entrance, the more money I'm going to make, right? Because I'm going to have more space between my entry point and my take profit. And this was it. This was an entrance here, and boom, it went all the way down. And for anyone who got into this trade, this is about 1,000%, I would say. If you would have entered here, and it would have gone all the way down like this, this is 1,000%. And that's a lot of fucking money. That is what the fundamental is, right? So how do we know about fundamentals? How can we know for sure what's the fundamental? Well, you do some research, right? We're Cerberus. We're a team, right? We're a community. This is bigger than myself. So we're a huge community, and we can all add up to the fundamental bag. Think of fundamentals as a bag. You have a bag here, and every day you add more fundamentals into that bag. So one of the ways that I do it is I go in forexlive.com and I look at the news, right? What is people saying? What are people saying about Bitcoin today? Where's the news, right? So this one, China, Beijing, they banned this company Kudo because they're a SaaS company building software services for cryptocurrency transactions, blah, 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 blah. This is good, right? This is good for us because this is a sure shot. I know for a fact that this is going to move the market. So now I just need to know how it's going to move it, right? And then I go on Twitter and I look for all Bitcoin influencers and I try to figure out, hey, what's going on with Bitcoin? I go, for example, on Twitter and I look at what Pompeo is saying. Pump has a daily letter of 2,000 of Bitcoin investors. And he's one of the biggest influencers, and he shows exactly what's going on with Bitcoin every day. He's one of the greatest analysts for Bitcoin. So I really, really want to know what Pompeo has to say today about Bitcoin. For example, this was an hour ago. Great example of why on-chain metrics will be viewed as superior information to what is currently in traditional markets. Near real-time and verifiable. So, this is really good. We can see what's going on exactly with Bitcoin and the transactions inside of the blockchain. We can know for a fact what's going on. So we can know if it's going up or if it's going down. We can know for a fact what is the trend. How is it going to trend for the next days? Because we don't enter trades to get out now. Like, I don't think it's going to hit 34,500 today. I think it's going to do it somewhere around tonight or tomorrow. It could be like in the next 5 minutes. We don't know. But for that to happen, I think it's like 10,000 BTCs need to be purchased between our point right now and $500 extra in the price. So that's what needs to happen, right? So how is that going to happen? Why would people buy 10,000 Bitcoins during the next 24 hours? What would be the reason, right? Well, the reason is because this and that and this and this and this. So we know for a fact, oh, you know what? It's going up or it's going down. Fundamentally, it's going this direction. So now I'll just need an entrance. And that's where these indicators come in, right? Indicators, very, very basic, simple, clean indicators that show us exactly what's going on in the market. Some of these indicators can be resistance and supports. So all the highest high. So this is called a candle. If you guys don't know, this is a candle. This is a candlestick. And the candlestick, you look at the highest high in candlesticks and the lowest low. The highest high is a resistance and the lowest low is a support. So it's a price point that supports acts like a support in the market. So whenever it touches that line, it bounces back because psychologically people know for a fact that it's going to bounce. So it bounces. That's a support, and for resistance, it touches that and it bounces back down. Then there's the trend lines. You look at the trend lines. The trend lines, you take the lowest lows and the newest lowest low and the previous lowest low, and you draw a line. In Binance Futures, you take the ray right here. This is called a ray, and you take your latest lowest low, which is this one, and the previous lowest low, and you create a ray like this. You need to be very precise with this just to make sure that you're analyzing the right stuff. And then you took your highest high, your previous highest high, and your latest highest high, and you do the same thing. And for me, this hasn't changed. This is the latest highest high, and this is the previous highest high. So we know that at some point it's going to try and get back up here, but we don't know exactly when that is going to happen because that takes a lot of effort. Yeah. And, I'm going to go super deep in these analytical tools, but basically this is super simple. I mean, it's a no-brainer. You can Google or you can YouTube how to use trend lines and how to use resistances and how to use support lines. But the most important part is Fibonacci. This thing. Fibonacci, if you look in nature, Fibonacci is the golden rule. It's the mathematical equation of God. You can see the Fibonacci pattern throughout all the universe. You can see it in the stars. You can see it in plants and atoms. You can see it in electrons. You can see it in the DNA. Your arm, by the way, and every single part of your body follows the Fibonacci sequence, which is 1.618. Is that it? I think that's the number. So between your shoulder and your elbow, if you notice, the difference between your shoulder and your elbow is 1.618 compared to your forearm. And your forearm has a difference of 1.618 with your palm, the palm of your hand. And the palm of your hand has a difference of 1.618 with your fingers. So this is the Fibonacci sequence, the Fibonacci numbers. It's the numbers of perfection. Everything follows the Fibonacci sequence. Everything in the world, specifically charts, specifically finance. So what we do is we say, okay, let's take the latest lowest low and the latest highest high, and let's create something called a Fibonacci retracement, which is this. So you saw I took my latest low, which is actually this one, and my latest high, which is this one. I'm sorry, I'm confused. There you go. And what you do is you look for, a lot of, there's a war in traders, right? A lot of traders are going to say, you know what, the Fibonacci number that we should aim for is 61%. There's percentages. There's 78%, 61%, 50%, and 38%, and then it goes to 23%. But the golden number that we want to achieve, and we know that it's going to achieve it, is 38%. We should always aim for 38%. And then, you see, this is 38, and look at what's in 38. It's 34,500. It's the perfect, just think of this, right? This is Fibonacci sequence, right? I just took my latest low, I put it in my latest high, And my 38% is exactly in one of the greatest round numbers in the universe, 34,500. And that is exactly what we're looking to aim. So that's so cool. That's really cool. And a bunch of other things are here, a bunch of resistances, a bunch of supports. So we know it's going to go and hit it because millions of other people are also aiming to get there. So we know for a fact it's going to get there. And basically, the idea is thinking like institutions, right? JP Morgan is the institution that we want to follow because they move about $1 trillion a day in the market. JP Morgan. Remember that name. And that's exactly the movements that we want to follow. They have tens of thousands of traders. And what we want to do is be in their shadow. How is JP Morgan thinking today? Right? I know for a fact that JP Morgan is looking at all of this. Wow, 60%, guys. This is incredible. So I know for a fact that this is a JP Morgan move. Look at how many Bitcoins are being bought. 358, 59, 126, 16, 29. That's a lot of Bitcoins being purchased. A lot of Bitcoins being purchased. This is really good. We are following a institutional trade right now. You guys are witnessing a institutional trade as we speak. This is perfection. This is the most perfect trade we have ever been in. Because we know for a fact that we're shadowing the biggest trader in the entire face of the planet Earth. And this is why right now we are winning. If you would have had $1,000 in your trade, you would have been up $500 right now, right? If you would have had $10,000 in your trade, you would have $5,000 right now in profits. And you could have taken partial profit. Well, actually, 30%, that's where you should have taken your partial profits already. Or took full profit. But anyway, guys, I hope you guys love this. I hope you guys learned something from this. You guys see it live. This is actually something that we're doing. This is something people are making money out of today. I think Warren has $1,000 in the trade right now, so he's gonna be making a lot of fucking money. So guys, I'm super happy. Like, don't let the bear market fucking kill you. This is the opportunity of a lifetime. If you learn how to do this, this is the most valuable skill you can ever have. So yeah, I mean, do you guys have any questions, by the way? Do you guys that are listening to me right now, if you have any questions, I'm here.
Got one question.
Yes, question.
Every day you're gonna told us, like every morning you're gonna help us like choose our position.
Yes, we do it together. Every morning at 10 a.m., around 10 a.m., we get in and we start trading. Yeah, every day. And it's that simple. Like, I took a lot of time to explain you this, but it's really, 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 really simple. The moment you understand that markets are moved only by institutions, like this is not the market. The market is not moving this right now. This is who has the power to buy 359 Bitcoins? I think about this. Who has the power and the money to buy 359 Bitcoins? How much? How many is that? That's $12 million. That's big investment. That's big money. That's smart money. Smart money like that comes from big institutions. So, all right, boys. I'll talk to you guys later. Peace.